Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asia struggles to keep the rally going after the S&P 500 hits another record. European futures flat as traders brace for results from Nvidia. Here in the UK, crucial inflation data is due in the next hour. BOE Governor Andrew Bailey says he expects, quote, quite a drop as the central bank weighs whether to cut rates.
As we've set out, I think that, the next move will be a cut, as we've said. The question for us is how long we have to maintain this level of restriction.
Plus, the divergence grows. Fed officials reaffirm the higher for longer approach on rates, while ECB President Christine Lagarde says there is a strong likelihood of a cut next month. Let's check in on these markets then as they weigh up that competing commentary from the ECB and the BOE on one side and the Fed reiterating higher for longer on the other side. European futures, as we said, relatively flat. The S&P notching a 24th record high this year by the end of the close yesterday. And of course, the volatility in focus ahead of the Nvidia earnings, with options markets suggesting a move of 8% in either direction, depending on what comes through, of course, from that key maker of semiconductors and chips for the AI space. European futures then, modest gains of 0.1%. FTSE 100 looking to add 12 points. S&P futures unchanged after that record of yesterday. NASDAQ as well also pushed higher, currently pointing to 18,809. A modest gain of just shy of 0.1%. Of course, that is the index because it can be particularly sensitive to those Nvidia earnings. Let's flip the board and look cross-asset then. The pound, of course, in focus on a day when we do get that inflation. Headline is expected to come in at around 2.1%. Core is expected to move from a plus 4% handle to around 3.6%. The pound currently at 127, of course, could be sensitive to that inflation data out of the UK. 441 on the US benchmark 10-year. And, of course, continuing to weigh up the commentary we've had from those FOMC officials, but there seems to be something of a consensus that it will be higher for longer. Governor Chris Waller saying that could be 3 to 5 months of additional data needed before he gets that confidence. But he still expects maybe a cut this year, if not early part of next year. Currently, Brent at $82.28, down 0.7% on a report of inventory build-up in the US. That is a second day of drops for oil. Copper currently under pressure, down 1.4%. It's also an inventory story and a build-up of inventories in China, the biggest buyer of that metal after, of course, it crossed through that record 11,000, currently at 10,705. So a bit of a respite for the run-up in copper, at least in the session today, down 1.4%. Let's cross over to Asia now, where Avril Hong is standing by in Singapore for a check on the markets there. Avril, what are you looking at?
We're looking at Nvidia, that anticipation of the marquee earnings event, and ahead of that, the struggle is real. The struggle for direction, that is. Markets in the region are moving sideways, whether you're talking about the Hang Seng or the Kospi, where we are seeing some clearer direction is on the Nikkei. Japanese equities are down today as we see a continued selling in bonds in the country as those yields climb. It is the expectation that the central bank will start normalizing monetary policy even further. Flip the board. I want to talk about Japan data before we talk about some of the Asia chip stocks. Flip the board, please, because we saw actually a deeper deficit than expected, flipping from a surplus the previous month. And this is showing how the weak Japanese currency is really playing out in the broader Japanese economy. It's showing how it's affecting the value of imports. This is potentially going to complicate things for the Bank of Japan. Flip the board again, because as we talk about central banks, we did get an interesting decision and messaging coming through from the RBNZ today. It's pushing out the timeline for those potential rate cuts into the third quarter of 2025, not the second quarter, even mild rate hikes at its recent decision. So more hawkish than some had been anticipating. The stocks in the country are pairing gains of about 0.8% earlier. We saw the Kiwi dollar spiking against the greenback and the Aussie dollar. Bonds there also coming under pressure. Okay, let's take a look at Asia chip stocks. For the board, please. As there's a lot of optimism baked in ahead of those Nvidia earnings. Taiwan Semiconductor, TSMC, it rising to the highest on record at one point. We're seeing SK Hynix is, of course, the supplier for Nvidia for high bandwidth memory chips, highest since 2000. All eyes really on Nvidia, Tom.
Yeah, indeed. We'll get more details on that story now with a preview. Avra Hong in Singapore with a check on the Asian markets. Thank you. To that top story then, Wall Street betting on a blowout quarterly report from AI leader Nvidia later today. Another one. The stock closed at a record yesterday with gains of about 0.6% as investors look for evidence that the chip maker can maintain its explosive growth. For more on this, let's bring in Matt Bloxham then from Bloomberg Intelligence to set us up for the importance of Nvidia today. What are we expecting then, Matt? What are you and the team expecting? What are you going to be focused on?
Yeah, I think generally the street's expecting another beat and raise from Nvidia. I guess there are really key numbers here of what they say about revenue for the quarter that's finished, but also the forward quarter. So they guided to about $24 billion of revenue in the quarter they're going to report, which is about 240% growth year on year. So it's a huge amount of expansion. The market's positioned just slightly ahead of that, maybe kind of somewhere between $24.5 and $25 billion. But I think more eyes are going to be on what they say about their Q2, so that the quarter we're currently in. The street is kind of positioned at close to $27 billion of revenue. So I think that's going to be the really key number to look out for, is what they say about this coming quarter. And if they give any more specific numbers around the full year. Now, historically, they've kind of withheld from anything because the business is growing so quickly, it's hard to kind of put a forward estimate on it. So that Q2 number, kind of around $27 billion, I think if it isn't at or above the consensus number, then that kind of option spread you kind of talked about, it could be a little bit more skewed to the downside. So I think people are expecting them to say better than $27 billion.
Yeah, and UBS analysts there pointing out that in the last 4 quarters of last year, they beat consensus on average by about 20%. So we'll see if they can match that again.
Yeah, and it gets tougher and tougher every quarter because people are catching up with it and understanding a bit better where this business really is and how quickly it's growing.
What is the competitive threat to Nvidia at this point?
Yeah, I mean, right now it's kind of relatively limited, but it is growing. So if you think people like Meta, Amazon, Google, they're all huge customers of Nvidia, and they don't want to be spending all their money with somebody else. They want to be developing some of this stuff themselves. So they are all developing their own equivalent chips and offering those to their customers too. And then you've got people like AMD as well in the picture. So everybody is racing to kind of create their own rivals because they don't want to be hostage just to Nvidia. I think right now, Nvidia is still 70% plus of the overall market, but over time, the choices will increase. But I think Nvidia and investors in Nvidia are hoping that the market is going to get bigger and bigger, so that even if there is rivalry, there's still a huge amount of opportunity for Nvidia.
Okay, 70% of the market share, and hoping that market expands with chips at what, around $70,000 for a single Blackwell chip, the most sophisticated chip, according to some estimates. Matt Bloxham with the setup there, the deep dive in terms of the preview for Nvidia from Bloomberg Intelligence. Matt, thank you very much indeed. Now, bond traders are trimming bets on 2 US rate cuts this year, as Fed Governor Chris Wallace says he needs to see several months of strong disinflationary data.
In the absence of significant weakening in the labor market, I need to see several more months of good inflation data before I would be comfortable supporting and easing in the stance of monetary policy.
OK, for more, let's bring in Bloomberg's Jill Deesis. Jill, then, you can answer this question for us, straight and easy, and then the markets can sit back calm and reassured. How likely are officials to see that disinflationary trend that they say they need?
I mean, well, Tom, I think it's going to be pretty difficult here, right? I did think that out of all the Fed speak that we've had recently, I mean, those Waller comments were pretty telling just in terms of throwing some cold water on some of those rate cut bets for this year. It's not really difficult to see why the markets reacted the way they did. I mean, I think he even got a little bit more specific, saying, 3 to 5 months worth of data is really what he needs here to kind of, sort of gauge in that idea of when they can start cutting rates, maybe something by the end of the year, really. I mean, it's, when you were talking about a market that just last week, after we saw the most recent inflation data, which, for April did look pretty promising, first cooling in that underlying U.S., that key gauge for the first time in like 6 months, that's, where we start to, trend toward, okay, maybe there's going to be 2 rate cuts by the end of the year. But this idea of, like the Fed really needs to see something that's, a lot more consistent. And given how sticky inflation has been, particularly on, some of these key costs that we're looking at, car insurance costs, obviously shelter costs continues to be a big piece of the puzzle here. It does seem like, that idea of getting into those specifics of 3 to 5 more months of that continued trend is going to be a tough, a tough thing to hit. And I think that's leading to a lot of the uncertainty that you're seeing in markets right now.
OK, Jill Deesis with the context around what we've been hearing from these FOMC officials and, of course, Fed Governor Chris Waller. Jill, thank you very much indeed. To the UK now, where April's inflation print is out in less than an hour's time. Speaking last night, Bank of England Governor Andrew Bailey said he's expecting, quote, quite a drop to levels close to the bank's 2% target.
We've got an inflation number coming out tomorrow morning. By the way, I don't know what it is tonight, so I can obviously say that. But I do expect quite a drop in the number, as we've set out. I think that the next move will be a cut, as I've said. The question for us is how long we have to maintain this level of restriction.
OK, I'm joined now by Lizzie Burden, our UK correspondent. Some quite clear commentary there from Andrew Bailey, the Bank of England governor, just ahead of this CPI print, this inflation print out of the UK. So is it going to align with what we've heard from Andrew Bailey? What is the number likely to be? What are we expecting? What are the forecasts? And what it could mean for the Bank of England then?
Well, today's the day that the UK inflation could actually get back to target. That's what the governor was saying. A drop from 3.2% to 2.1% in April is what economists expect. And it'd be significant because it'd be the first major economy to do that in this current cycle. So you can imagine the pressure on Bailey and officials at the BOE if inflation gets back to target to cut rates in June, or at least this summer, when you've got this lag in monetary transmission taking 18 months for rates to hit the real economy, and when you've got an election coming this year and a chancellor who's saying that rate cuts would be the feel-good factor that they need. So you heard Bailey giving that hint. I would say he wasn't as clear as Christine Lagarde in when the cut is coming. We heard from Deputy Governor Ben Broadbent in his final speech on the Monetary Policy Committee this week, saying that a cut is expected this summer, but that's not saying whether it'll be June or August. And you've actually got worries from some analysts that we'll get an upside surprise in this inflation number today, which would dismantle those bets for a June cut. At the moment, it's a coin toss. You could actually see less of a likelihood if we get an upside surprise, but a real focus on the services number as well.
Really interesting. So 2.1% on the headline, 3.6% on core. If we get to that 2.1% level or thereabouts, you've talked about the politics of this. Does Rishi Sunak, does the Chancellor, do they do a victory lap on the back of that kind of inflation data?
Well, they'll do a victory lap if it wins them the election. And at the moment, they haven't managed to translate the economic success into a poll lead. In fact, even though it was their top priority to halve inflation last year, and that happened, the poll lead of the Labour Party over the Conservatives has only widened. So it's going to be really important to capitalise on this, but really difficult when, as we know, it's really more the Bank of England's job to reduce inflation. And if you look at it, real wages are lower now than before the financial crisis. And the Chancellor himself has even admitted that living standards have fallen in this Parliament. OK,
Lizzie Burden, our UK correspondent, thank you very much indeed with a preview, of course, of the important inflation data out of the UK, 7 a.m. UK time, what it could mean for the BOE, but also the politics of the UK as well. We're going to be speaking, by the way, with the UK Shadow Chief Secretary to the Treasury, Darren Jones, after the data drops. You do not want to miss that conversation, starting just after 7 a.m. UK time. Here's what else we have on the agenda today then. 5 p.m. UK time, the deadline hits. BHP, Anglo, that offer. BHP, of course, making that offer for Anglo. They revised the offer up. Anglo going through this pretty significant plan around a restructuring. They have a deadline being set by UK regulators. This happens when it comes to mergers, and the deadline is 5 p.m. UK time. Will BHP come through with another offer before that deadline? We continue to watch that story. Then, 7 p.m. UK time, we're going to get the Fed minutes. Again, we've been hearing from FOMC officials. The consensus seems to be for higher for longer with some granularity there. But the Fed minutes will add colour to that picture. 7 p.m. UK time. And then, of course, on the earnings front, it is the big one. It's the gravitational pull of Nvidia. Those earnings post-market from Nvidia. And, of course, we'll be covering that story in all its depth as well throughout the day. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, go on the terminal. Coming up, the US has softened its earlier resistance to a broader Israeli military operation in Rafah. We discuss what that means for the ongoing conflict. More on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Bloomberg has learned that the US has softened its earlier resistance to a broader military operation by Israel in Rafah. A US official told us that Israel has incorporated Washington's humanitarian concerns into their plans. Joining me now is Bloomberg Horizons anchor Jumana Patechi in Dubai. Jumana, tell us then the latest, what we've been hearing in terms of this apparent softening from the US in terms of its early resistance, very vocal resistance, to a broader military operation then by Israel in that city of Rafah.
Well, the U.S. National Security Advisor Jake Sullivan has been doing a tour of the region. He met with Arab leaders over the weekend. On Monday, he met with senior Israeli officials, including the defense minister. And it appears on back of those meetings, the U.S. stance has now softened vis-a-vis this potential full-out assault of Israel into Rafah. Now, you know that in the past, we've spoken about the U.S. President Joe Biden's resistance to a full-blown invasion, namely out of concerns about the humanitarian situation on the ground and also mounting civilian casualties. The backdrop, of course, is that so far 900,000 people have left Rafah in the last couple of weeks. It is expected that still there are around 400,000 people still living on the ground there. But so far, Israel have kept their attacks on Rafah limited to the periphery. It's been on the borders. They haven't gone fully into the city. But of course, after this conversation that Bloomberg had with this U.S. official, it seems as though the calculus, as far as the U.S. is concerned, has changed.
What is our understanding right now of the humanitarian situation on the ground and whether or not aid is actually getting in?
Well, Tom, overnight, we found out that the UN has now paused or suspended operations of food distribution into Rafah due to concerns over security and lack of proper distribution. Also, really shocking images of very desperate Palestinians storming a pier that was set up by the U.S. military for the sole purpose of distributing aid yesterday. People stormed towards that pier in order to get access to some of the aid that was due, but ultimately that blocked the broader distribution of the aid getting into the rest of Gaza. And a spokesperson for the World Food Programme has told us that humanitarian operations in Gaza are, quote, near collapse. The UN estimate that 1.1 million people in Gaza do face catastrophic levels of hunger. And of course, Tom, this is important because let's tie it back to that ICC decision yesterday and the fact that the prosecutor there was seeking an arrest warrant for the Prime Minister, the Israeli Prime Minister Netanyahu, under allegations that they have been using starvation as a means of engaging in military warfare. That, in the ICC eyes, is deemed to be a war crime. And we know that Israeli officials have pushed back. They've said that the restriction of aid into the border is not happening at the borders. It's with the distribution internally that is out of their control. U.S. also had some very strong words with respect to that ICC prosecution that came out yesterday with the Secretary of State Blinken saying that it was absolutely wrong-headed for them to come out with this allegation and that there is no equivalence whatsoever between what Israel is doing and what Hamas did on October the 7th.
OK, Bloomberg's Jumana Patechi with an important update out of the region. Jumana, thank you very much indeed. On the humanitarian impacts, of course, we'll check in right now in terms of the commodity complex as well, because, of course, there is the geopolitical risk premium to be thinking about when we're looking at oil. But oil is actually down 3 straight sessions now, and it's less about the geopolitics and it's more about the inventory build-up, the build-up of stockpiles in the US. $82 a barrel on Brent, $77.99, back below $78 a barrel on WTI, down 0.8% so far in the session. Again, 3 straight sessions where the pricing of oil has come lower. OPEC Plus are meeting in June, early June, so their decision, of course, will be consequential. They've been cutting output, but so far, year to date, of course, oil is up. But you've seen a little bit of softness now on that inventory build-up in the US. We keep across this story for you. Coming up, the Central Bank of Nigeria raises rates for an 11th straight meeting. Will it be enough, though, to curb persistent inflation in that nation? More on that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now we have an eye on what is happening in the Japanese bond market with yields creeping higher and up to levels that we haven't seen for a long time. The benchmark 10-year Japanese bond yield reaching close to that 1% level. So yields up pricing down across the Japanese bond curve. We keep across this, of course, as speculation continues around when the BOJ goes with its next hike. Currently at 0%, of course, out of negative rates, not quite in positive, but we, of course, keep across this story for you. Again, the Japanese 10-year yield getting close to that 1% level. To another central bank now, this time on the continent of Africa, the Central Bank of Nigeria raising its key interest rate to a new record high in an attempt to curb persistent inflation and boost the nation's bruised and battered currency. For more, I'm joined by Bloomberg's Ondiro Oganga. Ondiro, what pushed the Central Bank then of Nigeria to hike rates once again?
Tom, there are a couple of things. One of them being inflation. If you look at headline inflation in the month of April, 33.7, it has been on an upward trajectory, and a couple of factors have led to this. One of them being removal of petrol and electricity subsidies, but also volatility of their currency. Another stubborn issue is food inflation at 40%. And the central bank says this is because of insecurity in food-producing regions, infrastructure challenges, and also pass-through effects of the Naira volatility. And speaking of the Naira, it's another factor. Since President Bola Ahmed Tinubu came into power, the currency has lost nearly 70% of its value to the dollar. And this is because first there was liberalization of the FX market, and then second came the convergence of the official and the parallel market. And even though the currency has gained some momentum, in the last 4 weeks, 28% of its value has been wiped off. So as you rightfully say, the central bank is aggressively raising its rates from 400 basis points in the first meeting, 200 basis points, and now 150 to ensure that interest rates are a little bit high to mop out excess liquidity from the market.
Ondiro, what is the market reaction then to this additional hike?
Tighter for longer policy is always harder for the market. Businessmen in Nigeria are not happy. Manufacturers are saying the cost of borrowing is really high for them, and that affects the cost of production and the prices of goods that they put in the market. Important to remember that Nigeria is an economy where minimum wage is about 30,000 naira, and there's a cash crunch currently in the market. Food inflation, food prices astronomical, and hence there's very little left to spare. On the other hand, IMF and investors are very happy with this decision. IMF says they're satisfied because the decision is backed by data, and investors are okay with a tighter for longer policy stance that mops off excess liquidity from the market, though they would like to see a little bit more transparency coming from the central bank because reserves are beginning to dwindle and the central bank has said little to nothing about it.
OK, well, look, if the IMF's happy, then, you know, we're all clear, aren't we? Bloomberg's Ondiro Oganga, thank you very much indeed, joining us on the latest in terms of that rate hike coming through from the Central Bank of Nigeria. There's plenty more coming up. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asia struggles to keep the rally going after the S&P 500 hits another record. European futures flat as traders brace for results from Nvidia. Here in the UK, crucial inflation data due in the next hour. BOE Governor Andrew Bailey says he expects, quote, quite a drop as the central bank weighs whether to cut rates.
As we've set out, I think that, the next move will be a cut, as we've said. The question for us is how long we have to maintain this level of restriction.
Plus, the divergence grows. Fed officials reaffirm the higher for longer approach on rates. ECB President Christine Lagarde, meanwhile, says there's a strong likelihood of a cut next month. Let's check in on these markets then. Of course, speak coming through in terms of central bank speak, filtering through these markets, but bracing as well for Nvidia, at least waiting for that catalyst and whether or not Nvidia can answer that question. Can it repeat the successes in terms of the earnings story of last year into 2024? Of course, those numbers crossing after the market in the US later today. European stocks pointing modestly higher, up 0.1%, just shy of 0.1%. Here in the UK, the FTSE 100 pointed gains of 12 points, up about 0.1% as well. The commodity structure is starting to soften a little bit in the recent days. S&P futures pointing flat after that fresh record, the 24th record high for the S&P just this year alone. Nasdaq futures also breaking through a fresh record yesterday, currently pointing higher by 0.1%, 18,814. Let's flip the board, look cross-asset then. So far in the session, Treasury's not all the movement there on the back of what we've been hearing from some of these Fed speakers. Again, Chris Waller wants to see 3 to 5 months more data before he has that certainty, that confidence in terms of the trajectory of inflation. 441 on the benchmark 10-year. Pound in focus, 127. Will it be whipsawed around the CPI print? 2.1% is the expectation on the headline number. 7 a.m. UK time. Core is expected at 3.6%. $82 a barrel on Brent. The inventory story and the build-up is part of the situation here for Brent. A little bit of pressure in the session, down 0.8%. 3 straight sessions of weakness now for oil. Copper also taking a breather for the second day, down 1.5%, and that's also a build-up of stockpiles in that key Chinese market. Copper at 10,701. Talking of China, a story breaking just in the last few minutes that Chinese banks, the mega banks, are pressuring managers across their branches to extend loans to SOE, state-owned enterprises, in order to fund that purchase of unsold properties. It really speaks to the urgency, again, of officials in Beijing and wanting to address the downward pressure that continues across the Chinese real estate market. So that detail crossing just in the last few minutes, and the story we keep across for you. Of course, the details around this are that ICBC is amongst other lenders. ICBC, of course, one of the biggest banks in the world. Again, leaning on their managers at the branch level to extend these loans. And they are getting the loans from the PBOC at a rate of around 1.75%. The People's Bank of China then, last week, saying it's going to establish a nationwide program to unleash about $41 billion in cheap funding to help fund that state-owned push in terms of buying up that excess inventory. And again, we've seen property prices falling the most in about a decade in the most recent data out of China. In terms of sales, they are expected to fall about 40%, sales 40% just in the most recent 12 months. So that pressure is acute, and Chinese officials clearly trying to step up and put in place something of a floor around that situation. Of course, the real estate sector makes up about 20% of China's GDP on some measurements. Now, switching focus, one of Wall Street's most prominent bears is turning positive. Morgan Stanley's chief US equity strategist, Michael Wilson, now sees the S&P 500 touching a record high by next June. Will it break through a fresh record again, as we said yesterday, the 24th time this year? That's an about turn then from Wilson, from his earlier view that the benchmark would tumble 15% by the end of this year. So why has he changed his view? He spoke to Bloomberg's Lisa Bramvich and Jonathan Ferro.
I wouldn't be surprised if we hit both sides. That's kind of the world we're in, which is, think about this year, and we talked about this at the beginning of the year, which is we had 3 sort of equally similar sort of outcomes. One was a soft landing, just the Goldilocks, which is kind of consensus now, and that's our house view. Then you have the no landing, which is kind of a reacceleration, the stickier inflation, even maybe a stagflationary outcome, which is what the market was thinking about in April. And now you're back to a soft landing, but you still can't rule out a recession either, right? So all of these are very possible, and they could all happen with a higher than normal degree of certainty. So that's really the headline that should have been out, is that, look, nobody knows anything, right? And particularly at a point in time, and I think maybe our mistake is just admitting that we don't know as much as maybe everybody else claims to. That's called humility, something that we've learned the hard way over life. But anyways, the point here is that the meat of our report this year, or this update, was really more about how do you make money in an environment where you have basically 0% upside and the base case, and you could have 20% upside or 20% downside. And that's what clients pay us for, right? It's the process. It's understanding, okay, what kind of environment and how are we going to navigate that and manage that? So we spent a large part of the report yesterday talking about trade ideas, specific sector ideas. That's not the headline that people want to write about. That's fine. That's your prerogative. But that's what we want to talk about.
That was never going to fit in the headline.
No.
We will talk about some of that stuff in just a moment. Let's talk about the headline just briefly.
Sure.
Are you de-emphasising the 5,400? Are you saying as a price target it's not actually that important to you and the firm? What is that?
Well, it's not important to most clients. Institutional clients don't care about the target on the S&P 500. Let's be honest. They're trying to pick stocks. And look, one of the most important things we talked about in the report is alpha generation this year has been spectacular. The way we measure it with our client base, which is significant, is this is the best alpha generation, alpha capture we've seen since we've started recording it since 2010. So that's what people care about. We're trying to help them in that their process of, okay, what kinds of stocks work in this environment? Oh, by the way, when we skew from these different outcomes, you need to be ready to pivot towards different types of securities. Right now, like our house call is it's a soft landing Goldilocks outcome. We're not that confident that we want to make that bet fully. Like, we think it's still late cycle, which means quality. Okay, large caps over small caps still. We like staples over discretionary. We have two defensive sectors, overweight, utilities and staples, because that kind of protects against slowing growth risk. So there's a bunch of different things, but the main factor that's been working is quality. Quality's been the most consistent factor, and we don't see that changing.
Are there specific sectors that win regardless of the overall index? Do you see certain areas that are kind of independent of this overall shift of whether there is this momentum in international money that pours in and keeps valuations high and sets them higher?
It's large cap quality. I mean that is what continues. And by the way, it's not just high growth. It's also cyclicals can work in that, but it's still up the quality curve. And we show it in the note very clearly. I mean, it's been the best carry factor for the last year and a half, which is a classic late cycle winner, which is where we are.
Morgan Stanley Chief US Equity Strategist Mike Wilson on his change of heart around the forecast for the S&P and the broader view, of course, across these equity markets. Now, Bloomberg Economics expects UK inflation to have slowed to 2.1%, hurrah, in the year to April, thanks in part to a fall in household energy bills. Bank of England Governor Andrew Bailey said yesterday he expects and predicts quite a drop in the upcoming inflation print due out in less than 30 minutes. For a preview then, let's bring in Ven Ram, our cross-asset strategist with our Markets Live team, who has views on the pound, gilts and everything else around the BOE and these central banks. Ven, how should investors then read, do you think, today's CPI data, given that we are expecting a soft print? It's been flagged by the BOE governor. He doesn't, of course, have insight into the data right now, but he has his own team forecasting it. 2.1% on the headline number. What are you looking at?
Morning, Tom. It's a hurrah indeed if it does match that print. But it's a question of who has the last hurrah. Look, I mean, core inflation is still supposed to find a 3% handle. Services inflation is still supposed to be above 5%. So that is kind of going to limit what the BOE can be able to do in terms of policy loosening later this year. I mean, the markets are thinking that 2 rate cuts are probably par for the course, which is possible if headline inflation comes in below 2%. That would give the gilt bulls fodder to rally from here. But what happens, what will be interesting is if the reading is higher than forecast, if the reading is higher than forecast, say 2.3 or 2.4%, then that kind of scuppers the linear disinflationary narrative, and therefore that will kind of cause gilts to sell off from here. So it's not only a question of what kind of print we get today, but also the prints in the months ahead, because the Bank of England expects inflation to re-accelerate beyond the second half, Tom.
OK, yeah, really interesting in terms of projecting forward on the inflation story for the UK. The divergence, I'll get there in the end, between these central banks, it's quite pronounced now, isn't it, in terms of the ECB and the BOE on one side and the Fed on the other. And we heard from the ECB's Christine Lagarde towards the end of the day yesterday, and kind of reiterating that June is likely from the ECB in terms of the cut. I guess what the question is going forward then is, how do they sequence that? Do they come through with July? Do they come through with the months after that decision in June? I mean, we're hearing from some of the hawkish members of the ECB saying, hang on, let's hold back on this. What was your take on how it folds and how it plays out post-June?
I do think that, I don't think we'll get a rate cut in July. Isabel Schnabel already alluded to that possibility. And I think that if the ECB were to cut in June, which now looks like a foregone conclusion, as you said, then I think it is eminently possible that we might get another reduction in September and probably another in December. so they go at alternate meetings. But a lot of that will depend on what the Fed does with its policy. And I think if the Fed is going to hold rates this year, then I would see 2 rate cuts possible from the ECB. If the Fed were able to cut rates at least once, then I think that it's possible that we get 3 rate cuts from the ECB.
OK, really interesting in terms of the analysis. Sven Ram, cross-asset strategist with our Markets Live team on some of the caveats around the inflation story in the UK. And a view there, you could get two, possibly three cuts coming through from the ECB. Sven, thank you very much indeed. Now we're going to be speaking with the UK Shadow Chief Secretary to the Treasury, Labour's Darren Jones, after that data drops in our next hour. So stay tuned for that conversation starting just after 7 a.m. London time. Now to deal-making, or at least a lack of deal-making. A redhead crossing the terminal in the last few minutes. Schneider Electric saying that talks with Bentley Systems have ended. Schneider Electric, of course, is a maker of electric components, things like chargers for cars, and they were in talks with Bentley Systems over in the US, which is a software integration company. But those talks have now ended, according to this line that dropped just in the last few minutes. So that potential deal, it seems, has been sidelined. According to this statement, both sides had been holding discussions and they've come to this agreement not to pursue that tie-up. So we continue to watch that story for you, Schneider Electric, and we'll continue to monitor that in terms of the open as well when it starts trading, 8 a.m. UK time. Coming up, officials head to Italy for the G7 finance ministers meeting. We're going to discuss the agenda next. Ollie Crook, who's going to be on the ground at that meeting, will be here in the studio to break down what to expect then from this meeting, with the geopolitics, of course, in focus. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday, by the way. Now, officials are heading to Italy for the G7 finance ministers meeting. It kicks off tomorrow. The US is hoping to convince allies to use the $280 billion in frozen Russian assets to back new loans to Ukraine. I'm joined now by Bloomberg's Oliver Crook, normally based in Berlin. He's been covering the G7 for us. Ollie, talk to us about where the debate stands. And there was resistance. At the beginning of this year, this was touted. There was resistance. There was pushback, particularly from the Europeans. How has that debate evolved then?
Yeah, and there still is pushback, depending on exactly what we're talking about, right? There's the seize versus freeze debate, right? The United States wants to seize those $280 billion worth of underlying assets, distribute those directly to Ukraine, which obviously would go a huge distance in terms of getting the financing for this war on sound footing going forward. The Europeans are very resistant to that. So what they want to do is bring the profits off of those assets that are being held by central banks, that about $3 billion a year, but that doesn't take you really that far. So what they're hoping to get at this meeting is the architecture to somehow front load that by saying the future profits can be turned into a sort of bond that is then dispersed to Ukraine now to the tune of about $50 billion, which, again, if you think about the sort of scale of the package that was passed by Congress, that was really a lifeline to Ukraine, that would be basically doubling that sum. And if that's what they want to sort of work out at this meeting, and then maybe to get that before the leaders in about 3 weeks to get it approved.
What is the resistance? I mean, Russia invaded Ukraine, have all these assets, we've seized them, why not just use the whole lot? What's the argument against doing that?
Right. Well, the question is this, is that does it sort of imperil the sort of, in the sort of liberal democratic order, one of the sort of key tenets is basically the right to private property and the rules around that. If you are starting to sort of violate that or not going, there's no legal sort of sound footing upon which to do that, then really you start to have questions about, is the euro a safe reserve currency? And this is sort of the resistance that we have heard from the European Central Bank and from the Europeans, whereas the Americans are saying, listen, as you say, it's cut and dry.
What's the latest on the trade front? When what is top of mind for G7 ministers? Is it China when it comes to trade, and how much alignment is there across this grouping?
Well, I think there will have to be. I mean, they're sort of rhyming in terms of the U.S. and Europe. Europe is taking a bit more of a cautious approach in terms of sort of its approach to China. But of course, you've got these tariffs now from the Biden administrations coming in, China hitting back. This is going to be a major question for the finance ministers there. There's this question of industrial policy. There's the sort of unresolved question around the Inflation Reduction Act, and the Europeans maybe not saying a great deal about that. But central bankers will be there too. If you get a full-on sort of trade war, a tariff war, that is going to have a huge inflationary pressure potentially. So that will certainly be front and center for the central bankers who are talking there, although Jerome Powell came down with COVID last week, so I'm not sure that he's going to make it. We're still going to keep an eye out on that.
OK, let's hope he bounces back from that pretty swiftly. Ollie Kurrick, thank you very much indeed, who will be on the ground at that G7 ministers meeting, setting us up very nicely for the key topics that will be addressed at that event. And again, Ollie will be reporting for us throughout the G7 in Italy. Now to some other stories making the news today. A lobby group says on the question of trade that China could unleash tariffs as high as 25% on imported cars with large engines. The China Chamber of Commerce to the EU posted on X it was informed about the potential move by, quote, insiders. Such levies would affect European and US car makers and have a, quote, significant impact on Beijing's relationship with Brussels. China is ramping up threats of retaliation as the first deadline looms for the European Commission's probe into Beijing's subsidies of its booming electric vehicle market. Argentina's President Javier Milei says he has no plans to break relations with Spain. That's after a diplomatic crisis between the historic allies expanded yesterday after the libertarian leader's comments at a far-right rally in Madrid led the European country to recall its ambassador from Buenos Aires. The Argentine president lambasted the move as, quote, nonsense typical of an arrogant socialist. And Bloomberg has learned that BBVA has hired a public relations firm to help it overcome the Spanish government's opposition to its hostile bid for rival Banco de Sabadell. The bank has tasked the company with swaying public opinion in favour of the takeover. And staying in the banking space, Barclays is said to be weighing whether to require some workers in the US to attend company offices 5 days a week. This as US brokerage regulators enact new rules for supervising work at home. Discussions are already advanced enough that some managers have started warning employees to prepare to commute daily. There is plenty more coming up. We're going to do a preview and a deep dive on the Nvidia story. Stay with us. This is Bloomberg.
And everybody complains about meetings, but what one should really complain about is not being prepared for meetings, not paying attention in meetings, not remembering what happened in meetings. The meetings co-pilot helps keep the knowledge always front and center for an organization. So the feature we are launching is really this thing called Team Copilot. This Team Copilot is going to be in the meeting and everywhere your team is working on. For example, if you're doing a project and you want project management assistant, this Team Copilot will help you and all your teammates. It's kind of like having an AI teammate that helps you.
Well, on that note, for all of this to really work, you've really got to trust your PC with everything about you. Will it know you better than a real assistant or a friend or a colleague? And are we in relationship territory?
Yeah, it's a super important one, right? Which is, to me, there are two things. One is, how should one think about privacy? How should one think about safety? And then the third is, how should we relate to AI, right? All of these are important. So let's take them, even unpack them, right? On the privacy side, that's where I think there are going to be needs for real private information. And whether it's in the enterprise side where people say, don't train on my data, that's the assurance we have for anybody in the cloud even, or the new PCs we just launched yesterday, right, which are all about keeping everything that you're doing on the PC local. So that's on the privacy side. Safety is another one, right, which is how do I make sure that whatever I am doing is safe? I'm safe from adversarial attacks. And then the third is the relationship side is like I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have, right? I think one of the most unfortunate names is artificial intelligence. It's a different, I wish we had called it different intelligence even, because I have my intelligence. I don't need any artificial intelligence. I just want my intelligence to compose with this different intelligence so that I have more agency, quite frankly.
OK, that was Microsoft Chairman and CEO Satya Nadella speaking to Bloomberg's Emily Chang on the question of AI. Put a pin in that because we're coming back to the AI story in the next minute or so. But for now, let's switch focus to what we've been hearing from Fed officials, signalling again, reiterating that rates will stay higher for longer. Take a listen.
This economy has been incredibly resilient, stronger than I expected, and I've been really pleased by how fast inflation has come down in spite of that.
But I think it's a little too soon to determine where inflation necessarily is going. Base case, I do think we're going to have inflation come down, but I think it's going to take longer.
I think this is a moment when, or a period when patience really matters. It's going to take longer for us to see the extent of progress that I think is going to be necessary to change our policy stance.
Frankly, we're not taking a big risk by doing that because so far the labor market remains very healthy.
Some of the latest commentary then from Fed officials. So we go from the macro to the micro and the story around Nvidia and the question of the volatility that this earnings story could produce for these markets, with options markets pricing in a move of around 8% either side, up or down. And that could translate, by the way, to gains or losses of around 188 billion US dollars. By the way, for the context, UBS pointing out that in the 4 quarters of last year, they beat on average the consensus estimates. They beat Nvidia by about 20% on average. Again, this is the potential market cap move on the back of this earnings story. The expectation is they're going to come through with revenues up 243% on the year before. The stock is up about 90% year to date. It tripled, of course, last year. So that story is so consequential, case for the broader markets, given, again, it makes up about 5.3% in terms of weighting of the S&P. We are counting down as well, back to the macro, to the inflation story of the UK. Are we going to get a 2 handle on the headline number? 2.1% is the estimates, 3.6% on core. We get that 3 handle from a 4 handle on core. That could be consequential. Currently, the markets are split 50-50 into whether the BOE goes in June. We're going to be breaking that story down for you on the Markets Today show. We're going to be speaking as well, the team there, with the UK Shadow Chief Secretary to the Treasury, Darren Jones, after that inflation drops in the next couple of minutes. Do not miss that conversation, starting just after 7 a.m. UK time. Markets Today is next. This is Bloomberg.